But meantime, I want to get back to the market reaction as things look to be playing out in the direction that a lot of people were hoping here, as it was pretty telegraphed heading into this. The latest we're getting there from the Fed, as I said to start the show, the S&P 500 and the Nasdaq hitting all-time highs here to wrap up the week. And for more on what we learned today, I want to bring on Courtney Dominguez, Payne Capital Management Senior Wealth Advisor, joins us once again. And Courtney, good to be chatting with you here. Just your reaction, I guess, first to what we heard from Jay Powell a few moments ago as Brian was laying it out there.
Yeah, I think it's really nice to see how positively the markets are reacting to this. And realistically, what you're seeing is the Fed has said, okay, we're going to start to dial back our asset purchases. And it's because the economy is strong enough to withstand that. They're looking at where unemployment numbers are, people getting back to work. And so ultimately, they're able to do this because the economy is on good footing. And that's really what the stock markets care about at the end of the day is how is the economic data looking? So all that positive news just means we're likely going to continue to see things improve going forward, which I think is a really optimistic sign.
Yeah, and I wonder too, I mean, we got the other data out here, consumer prices rising, PCE, the preferred measure of inflation that the Fed uses, 0.4% last month. That was lower than the prior month's 0.5% gain. So we talk so much about what Jay Powell has been harping on here when it comes to transitory inflation and how that's expected to maybe come out in the future months. I mean, I wonder how much the data now really is lining up with what he was saying a few months ago and whether or not the market reaction we're seeing play out now today is basically a lot of that coming true.
Yeah, and that is something we're definitely going to be watching, which I think longer term, I don't know if inflation is going to be quite as temporary as I think everybody is, or the Fed is saying. Because what we are going to see, I think the fall is going to be a really important time to look at. Because we're seeing people going back to school, some of those unemployment benefits are expiring. And as we see it, what that's likely going to lead to is the shortage in the labor market can actually get exacerbated, which can increase wage increases. And that in and of itself can add to inflation. Despite some of the more shorter term things like production issues, which will eventually get figured out, I think there are some things that can lead to further inflation. So yes, I don't think it's coming here right away, but I do want to just kind of reiterate, you do want to have those hedges on inflation in your portfolio because it still might be coming here in the future.
Let's talk about other ways investors maybe should be tweaking their portfolio here today. I mean, I'm looking at kind of some of the moves around the market after the updates and a potential tapering here later this year. Right now, energy is the biggest standout by about 3% here. All of its sectors, though, in the green. I mean, when you look at maybe how investors should be rebalancing portfolios here, given what we know now about a potential taper, I mean, is there any maybe change in policy here in terms of the year-end allocation that you might be advocating?
Yeah, one thing we've really been looking at is over the last couple of months, everybody has been refocusing back into all of your big tech firms, all the exciting companies, which are just continuing to get more expensive. But I do think this was a conversation like earlier in the year and last year of rotating into cyclicals. And I think just kind of re-rotating back into that direction as those things have gotten a lot cheaper is a really good opportunity right now. You actually mentioned energy, which does follow under like your value or your cyclical side of things, which I do think is a really good play right now, just considering your energy prices. So the price of oil has increased a lot more significantly than most of your energy stocks have. So I think there is still a lot of price to go there. And I think looking at the fact that production's actually down, demand is expected to increase, that can be a really good way of playing this year in the future.
Yeah, I mean, we talked too about financials following energy as kind of one of those pieces of the market on the cyclical side that you might want to look into here. I mean, if it is going to maybe take longer, though, for rates to come back up, they had, the financial sector had been moving higher on the expectation that we would see rate hikes maybe sooner rather than later. I suppose that was a few months ago when we were having that discussion. But if they do get pushed out a little bit more here, I wonder what the opportunity looks like for financials.
Well, I think what you want to keep in mind is the fact that we don't need these things to happen right away. The markets are going to price at what's happening several months in the future, right? So I think the idea that interest rates are rising, whether we get that definitive data now or not, is going to be important for banks. But realistically, even regardless of that, banks are just so much cheaper than the rest of the markets right now. And a lot of if you look at their loan to deposit ratio is actually below their 20-year median right now. And so looking at loan growth is really attractive for some of your banks. And there's expected to be a lot of mergers in that space as well. So I think for a lot of reasons, your financials are a good play. Probably more of a longer term than a shorter term play, but I do think it's a really good opportunity to continue to look into.
Overall, though, tough to kind of tease out and say that anything hasn't gone well for Jerome Powell here. Again, still waiting to see what President Biden might want to do with keeping him in that role. But overall, your grade here for what we're seeing play out as this Jackson Hole wraps up.
Sorry, say that again. I missed the question.
What are we thinking? A, B, C, D. What are we gonna give Jay Powell here for a grade?
I mean, I think we kind of have to see how things progress here. But I mean, so far he's really kept the economy going strong, and I think you really do have to appreciate that looking forward here. So I think the bigger thing right now is like what's happening with inflation, which is very much do people think that that's being handled correctly or not? So far, so good though. So I think we got to just keep watching.
Yeah, the market giving him an A, at least for now, in terms of how he's choreographed all the things that's happening in real time. But Courtney Dominguez, Payne Capital Management Senior Wealth Advisor, appreciate you coming back on here to chat with us today. Have a great weekend.